Hello, everyone, and welcome. I'm excited to have you here today. We're going to explore the basics of share market. This session is specially designed as an introduction for beginners. Over the course of this presentation, we'll cover what the share market is, how it works, and some key concepts you need to get started. So let's dive in and make the complex simple. So what exactly is the share market? Well, think of it as a platform where shares of different companies are bought and sold. Companies issue these shares primarily to raise capital, which they can then use for growth, expansion, or other needs. When you buy a share, you're essentially becoming a part owner of that company. Investors purchase shares with the goal of earning profits, either through dividends, which are a share of the company's profits paid out to shareholders, or by selling the shares later at a higher price. This process creates opportunities for both companies to grow and for investors to benefit financially. Understanding this dynamic is key to grasping how the share market fits into the broader economy and investment landscape. Now, let's take a look at the different types of share markets. First, we have the primary market. This is where companies issue new shares to the public, which is often called an IPO or initial public offering. It's like the company's first time offering its shares to investors. Then, there's the secondary market, where existing shares are bought and sold between investors. This is what most people are familiar with when they talk about stock trading. In India, the main examples of secondary markets are the NSE and BSE, which are the National Stock Exchange, and Bombay Stock Exchange. Understanding these two types helps us see how shares move from companies to investors, and then among investors themselves, which is essential in grasping how the overall share market functions. So, why should you consider investing in the share market? Well, one of the biggest advantages is the potential for high returns. Over time, the stock market has shown that it can offer significant growth, helping your money work harder for you. Another key point is that investing in shares gives you ownership in companies. This means you're not just a bystander. You actually have a stake in the success of the businesses you invest in. This ownership can be quite empowering and rewarding. Additionally, many companies pay dividends, which are essentially a share of their profits distributed to shareholders. These dividends can serve as a form of passive income, providing you with regular cash flow without needing to sell your shares. Finally, investing in the stock market is a great way to beat inflation over the long term. As prices tend to rise over time, having your money invested in equities helps ensure your wealth grows at a pace that keeps up with or exceeds inflation. All these points highlight why the share market can be a powerful tool in building your financial future, especially when you're thinking about long-term growth and stability. All right, let's talk about some of the risks in the share market. One of the biggest things to keep in mind is market volatility. Prices can go up and down quite a lot in a short period, which can be nerve-wracking, but is also part of investing. This leads us to the risk of losses, meaning you could lose money if the market doesn't move in your favor. It's also important to realize that the market isn't isolated. It's influenced by a variety of factors like the economy, politics, and global events. These can all cause sudden changes in stock prices, sometimes unexpectedly. That's why, to navigate these risks successfully, research and patience are essential. You need to stay informed and be prepared for the long haul. Remember, understanding these risks helps you make smarter decisions and manage your investments better, aligning with our overall goal of becoming confident, knowledgeable investors. All right, so now that we've covered the basics, let's talk about how to actually get started with investing. First up, you'll need to open a demat and trading account. This is essentially your gateway to the stock market, where your shares will be stored securely and you'll be able to buy or sell easily. Next, choosing the right broker is crucial. There are many options out there, like Zerodha, Upstocks, and others. Look for one that offers good service, reasonable fees, and a user-friendly platform. Once you've set up your accounts, it's important to do your homework. Research the companies you're interested in before investing. Understand their business models, financial health, and growth prospects. This will help you make informed decisions and avoid unnecessary risks. Then, start small. don't jump in with a huge amount of money right away. It's wise to begin with a manageable investment and gradually increase as you gain more confidence. And remember, diversify your investments across different stocks or sectors. This reduces risk and helps you build a more resilient portfolio. Overall, the key is to approach investing thoughtfully and steadily. Starting with these steps will set a strong foundation for your investment journey.